So moving on to balance sheet, a balance sheet basically, I think the easy thing about a balance sheet is that it shows you what is currently that you have going on here, and basically what's going on here is with the balance sheet is that you can see the object of the goal of the balance sheet is to figure out what assets you have, what liabilities you have, and to show you the ownership of the business as well. So current liabilities is something that needs to be paid within the next year, and receivables are also expected to be received within the next year. And this is basically, I think that, going one step back, it basically really shows you right away how large is the business, or it shows you how levered is the business, which means how much debt it's using. And it can also show you what is, by how much are assets greater than liabilities, which is called net assets. This is this piece of equity, which is, what essentially, if you subtract the liabilities, what do you have left? And that's all it is, which is in your personal life. If you think about your net assets, figure that number out, you'll really understand net assets really on a visceral level. It's really, what do you have, what do you have beyond liabilities? And owners, we can get into that. Who is the owner? That could be varied. The income statement, we'll go a little bit deeper more in our example, but essentially we look at sales, with the fashion concentration that a lot of students have in this class. A lot of it we can get into a little bit deeper, as I'm sure you'll see in other classes, in terms of discounts and various ways of including discounts in your cost of goods sold, and how that creates your essentially your operating profit, which, just the profit on selling the goods before the interest and taxes and things like that. So this is, I want to expand more on this as we get deeper into the class, because there is a lot here that happens in retail, because as I'm sure all of you know and have seen from practice as well as in business, that in fashion, in retail, there's a lot going on with discounting. So, and that's it. That could be a very interesting numbers game as well. So we'll get further into that. And we get further into, subtracting the tax and looking more on that. We'll have a chapter on tax, I believe, and coming up with the earnings per share to look at what that is. Statement of changes in stockholder equity. In this situation, what we have is essentially stockholders' equity is the ownership, right? So what impacts ownership? It's really three things. We could have income or expense that would increase the net retained earnings at the end of the year, the net equity at the end of the year with the income. And then also we could issue more capital, which means we raised equity. That would create more equity in the company. Of course, that would have also more cash or more assets on the asset side. Makes sense. And we could also have dividends. Dividends distributed would reduce equity, and that's basically the way equity would get impacted.